Hi guys, Rick Goodman from OBrien Real Estate with another edition of the Northern Weekly Property News. Well, the March house price data was released by CoreLogic last week, and Melbourne delivered a 0.4% increase for the month, finishing the first quarter of 2020 up 2.9%, with annualised growth now sitting at 12% for the last 12 months, leaving us with a median house price just shy of $700,000 at $695,299. For investors, the weekly rents have increased 1.5% over the last year, with an average yield now sitting at 3.2%. The ANZ also announced during the week a 2-year fixed rate home loan for 2.19% for home occupied and 2.49% for investors with its break-free package. That's the cheapest we've seen so far from any of the big four banks. The Reserve Bank on Tuesday decided to pause the economic stimulus and has kept interest rates on hold after 2 cuts made in March. We still have room, obviously, for one more cut if needed as we go into May. Across the board, although housing prices continue to rise in March, the second half of the month experienced a significant weakening in new listings growth, and the trend is likely to continue while the social distancing policies are in place. Buyer activity, although slower, the quality is good and property is selling. We see this continuing, particularly with reduced listing levels as we go through this pandemic. Now let's review the market for the week across the OBrien network. We produced 234 sales with an average of 34 days on the market, and the highest price achieved was $14 million. We had a median price of $856,000. Compare that across the industry in Victoria, we saw 979 sales take place. CoreLogic reported 572 auction results, 279 of those selling, 33 selling by online auction, 1 selling after auction, 32 passing in, and this week we saw 227 properties withdrawn or converted to private sale. All in all, a 54.72% clearance rate compared with the same time last year at 57%. Another chart appearing on your screen is one that illustrates how housing markets have historically performed relatively well against negative economic shocks. This chart shows 35 years of real estate values. The source of this information, CoreLogic, is the number one in data for real estate, and the chart shows that during the global financial crisis in 2008, that real estate prices dropped no more than 10% below the line. And it did say in the 2018-19 Banking Royal Commission, it did say. You will also see the extraordinary growth in prices during the late 1980s, and those prices corrected very quickly thereafter during the early 90s recession. We had 11% unemployment and 19% interest rates back then, but you see prices never dropped more than 5% below the line. And of course the big difference between now and the early 1990s is we have interest rates, as I said before, fixed with the ANZ at the moment 2.19%. Lastly, there are buyers out there, guys. Stocks have dwindled dramatically in recent weeks, and with many potential vendors choosing to sit on the fence and see what happens, it may be a good opportunity for you to capitalise on their trepidation. Feel free to give me a call at any time and have a chat about how the market's tracking right now on 0401 436 624. I'm Rick Goodman. Thanks for watching. Stay safe, and I look forward to speaking to you all again very soon.